Hey all, welcome to this episode of A Good Problem to Have. I'm your host, Tyler Olson, and today I'm joined by friend and colleague Tyrone Ross. He's the founder of 401 Financial and Turnkey Labs. Thanks a lot, Tyrone, for talking with me today.
Thank you for having me. I'm excited for this one. Let's dig in.
All right. Yeah, and the reason why is I know you know this, but people listening don't yet. I wanted to talk to you about Bitcoin. I have appreciated your advocacy, even in the face of criticism from me some years back, and I'm sure others.
Yeah.
But you continue to lead with education, trying to help people understand what this is and what role it plays in our life.
Hmm.
So that's what I wanted to talk about. Do you like talking about it, I presume, yeah?
Yeah, absolutely. But I think that's a really good place to start because in there's no legitimacy without scrutiny, as I say, right? And I think your colleagues, yourself included, and others challenging the thought, challenging the interest in it was something that obviously it not only hardened my conviction, but also made my thoughts and clarity a lot better and deeper when it comes to it. So, I only know Bitcoin as an advisor, right? I was at Merrill Lynch when I got baptized, if you will, right? We talked about the religion part of it, but so it's been about 12 years now. So yeah, I've been doing it every day since right about 2014 or so.
Okay. Yeah.
So I talk
And like what I'll tell you how I explain it to people, like what it is, and I'd
Okay.
love to hear what you got to say because I think you'll have a better way. But the way that I explain it to people is that it is it's a like a worldwide web based uh treasure hunt that starts that way, but it's not just a game, it's a way in which through efforts and energy tokens are achieved, and there's only a limited number of them, and we call them they call it Bitcoin. And once that is totally, like, it's all been found within the computer networks of the world, then that's it, and it is a scarce digital asset.
All correct. All correct. I think the first thing people get wrong with trying to explain the Bitcoin is trying to explain Bitcoin. And I think it is all things, but it depends on the lens through which you're looking at. So the first thing I try to do to make the distinction when folks want to start to talk about, well, what is it or the value or whatever is, you have big B, Bitcoin blockchain, you have little b, the token, the coin, however you want to separate those and describe them. But I think it's important to make that distinction right away. Then you get into explaining it your way, how it actually works. At that point, you're basically saying it is the most reliable, powerful database in the world. It's boring and slow on purpose, right? So at that point now, right, you have this ledger that you can obviously send value anywhere in the world at any time based on the energy and everything that you were talking about. Which is also why I say to get people to understand it is, if I'm walking on the street, and I say this with, like, we have a lot of punch drunk crypto hippie clients at 401 like me and Eric, but we do have the occasional client that does it on it, right? The best way, and I found very unique and simple ways to explain it. But right now, and it has been like this since paper cash was created. If I walk up to Tyler and I hand you $20 and I walk away, who knew? Me and you.
Right.
I knew it was a 20. You looked later and knew it was a 20. That never existed in the digital realm with money until Bitcoin came to be. Right? So everyone goes, oh, okay, I can send you Bitcoin. Don't need to know your social security number. Don't need to know anything about you. But if I want to send you that to your wallet, you can have it. No one will ever know. So it's very similar to cash in that way. And that's kind of where the light comes on for people. So there's these little pieces and frameworks of try to get folks to understand it. But there are certain things that I believe it's not as well, what we can get into, but I think a lot of it has to do with how you come to it. I came to it because I grew up in a house without a bank account. So it was impossible for me to unsee it. If you're an engineer, you look at it differently. If you're a rocket scientist, you look at it differently. If you're a financial advisor, you look at it differently. So it's this globe where, depending on where you look, it's all these different things, but tick tock, next block. It just keeps working. It's just a big, lazy database. And to me, the best flashlight in the world, because it shines this light on all of the inequities that is in the existing financial system. Now, is that worth what Bitcoin is worth right now? No, it is really cheap if you look at it that way, to me, because it still has a lot of things in our existing system that it needs to disintermediate, and I think it's getting there. But anyway, great way to form the conversation. I think you're right. And I think adding a little bit around that is how we try to explain it to people who don't own it, but it definitely takes some coming back with more questions before an allocation for sure.
Yeah. Okay. Yeah. No, that's I mean, what I hear from you is that there is a great deal of potential uses for it in both like a like a like a like a macro level, like how it could impact the way in which uh, humans manage their economy,
Yep.
but also very much on the individual level that there could be benefits too. Um, there, I think that's like where I run into like roadblocks is understanding that potential
Okay.
because I mean I can see where it can where it's theoretically it's something that could be useful, but then I see so much focus on, and then maybe this is just like a this my scope is too limited, I need to expand it, but what I see are a lot of people on social talking about how you just need to get more Bitcoin, you got to get more of it, and that sounds like people are like I don't mean to say it, I don't think that they're greedy, but
Yep.
that's the feel of it. And I'm
Mm-hmm.
like, how does the encouragement of that sort of behavior around this asset, how does that affect its future usability? Even if there's like some use cases for a decentralized system that no single entity can control, allowing the masses to be able to use it for whatever they cumulatively or collectively want to, if there's this component of people buying as much of it as they can and hoping that the price of it gets driven up. Do you
Right.
know what I'm saying?
No, I hear you. But what I always say to other financial advisors and institutional investors, I push back and go, well, how is that different from NVIDIA, right? Of a stock or the stock market where you say, get more money in the market, get more money in the market, right? Get some in your 401k and then get a brokerage account, get more money in the market because it creates wealth. Also, if we're being honest as fiduciaries, I don't think you or I buy anything that we believe to be an asset that we don't want to sell at a higher price, right? So,
Absolutely.
hey, just to be honest with these things. Now, the same way people get tripped up on Bitcoin, I use this example as well. A house is not really an asset, if you will. Like you need it, it's shelter, and all these other things, but you need it, right? And people confuse that sometimes with, oh, I'm going to buy it and it's going to be higher and it's going to, does it really work like that, right? And I think the same thing, that same mindset, not they're not perfectly connected, but I think it's the same way. So that's the first part. The second part is funny that you mentioned that. Before coming on here, Michael Saylor tweeted something that all of the crypto folks in Bitcoiners are worried about. He says, well, if I get lucky enough to accumulate 10% of the supply, we don't want that, right? Like no one, right? So now the other side of that, if you invert it, if you will, that's where you also have to make the distinction between the chain and the blockchain working. That's like somebody saying, well, I'm going to accumulate as many domains as possible, right? And you're like, okay, I'm going to 90210.com and wealth.com and all the coms. All right.
Right.
The internet is still the internet, you know, like it's still going to, right now, will that make you very wealthy? Sure. Will you be able to sell AI.com, everything? Yeah, sure.
Mm-hmm.
So I think you nail it on that, and I think what folks fail to, and this has been my frustration over the last couple of years on social media and the like, what they fail to get the broader population to understand is that distinction between the coin and the token. I mean, the token and the blockchain, and how these things are divisible into satoshis, how long it's going to take for all the coins to be mined. I think it's like 2140 or something like that.
Yeah.
None of us will be around to see how that ends, right? So I think for the time being, what I don't like from the existing space and those the zealots, if you will, or the proselytizers, is just get as much as you can, and it's a savings mechanism one week, and then it's a safe haven the next, and it's a proxy for gold the next, right? I think you really need to take a step back if we want to get the majority of people to first understand it, just what the whole hubbub is here, and then say, okay, a small allocation means this, right? And however an advisor wants to frame that as satellite allocation, alternative investment, however that works. But and then to put the ribbon on what you were saying, I think what I want everyone to take away from this that is listening, that either is interested already or has an interest but hasn't done something yet, is what you begin to understand when you really research it. And again, I've been reading about it, been in it every day, literally every day since I left Merrill Lynch. What you start to understand is there's now a point where, one, there's more data, reliable data, than there's ever been. And guess what? It's only 10 years worth, right? Anything prior to 2014 is not that reliable. So you got 10 years of reliable data. You've had Bitcoin go through all these different macro events, big, massive events, COVID, right? Shutdowns, all these things. So you're starting to get a feel for how it would perform. You're starting to get more opinions. You're starting to see names that are familiar, that you know, that have an interest, right? All of a sudden, JP Morgan's interested and it's cheap. It's funny how that works. So I think the first thing you want to look for is legitimacy. So you're taking less of a bet than those did earlier when there wasn't the data and the research and the Franklin Templetons and the BlackRocks. So now if you're looking at this and you're coming to it, you can read a lot. You can get varying opinions instead of, man, everything I read, everybody just loves this stuff, right? But you can get people, and there were people who didn't dislike it before, but they didn't have the data to back up their hate. Now there's a lot of data to say, okay, these are the things that, whatever the reasons are that you don't like it, there's very detailed research reasons why. It wasn't like that when I first got in, or a lot of people. So now you can put those two things together, formulate an opinion. If it makes some sense to you, maybe you do a little bit, see how it performs. It's not gonna, change your life in any way. It's just enough to watch it, and you go, man, if that was $100,000, I don't know if I could have stomached that.
Yeah. Yeah. I mean, I can see it. I see what you mean about the growing body of work and legitimacy. I mean, even like we're having more conversations with like our compliance attorney about this, and like how we communicate it with clients, um and how I communicate about it publicly. Even having this conversation with you and putting it out there is something I wanted to talk to my attorney about first. But
Yep.
I'm much less I'm much less worried about that than I would have been like 4 years ago.
Yep.
Um, and I can see, and like to the such as for the reasons that you just mentioned.
Yep.
Um, okay, I wanted to I wanted to pivot to something
Sure.
to because what I want to be able to do is to help any physicians that are listening and anybody else who's not a doctor, of course, who's listening to appreciate what their role in their life, what their role is with this growing asset class. And I
Yep.
wanted to start with like I had a comparison to make,
Mm-hmm.
and it's definitely imperfect, but it's the best one I could come up with so far. Imagine it's the 1750s and 60s,
Mm-hmm.
and you run into the the American rebels who are being like, hey, you know what? Forget England. We're going to do our own thing.
Mm-hmm.
We're going to have, in fact, we're going to have our own currency. We're going to have our own government, our own economy. And this is what we're going to do. And we got, obviously, like when that's happening, you only have a few steps in front of you. You can't know the plan that would eventually develop into the United States government and country that we know of today. But there must have been some degree of like, hey, this is what we have in mind.
Yep.
And that's what I'm wondering. Like, I feel like anyone who's on the outside is like observing like a new country being formed.
Yep.
And they're deciding whether, like, is it crazy for me to join this group? Or are they about to do something really cool and I should join them?
Yeah. Yeah.
So, like, I guess the question is, what's the plan
Yeah.
as far as you can see?
If I'm being completely honest, I think the plan was to be um, a new set of rails for the financial system, to remove third parties, to give people self sovereignty and control over their money. I think that plan has been co opted by Larry Fink and others, right? I think right now it is so institutionalized. The cypherpunks and the folks that had that original vision, it's been taken from them. And there's still this underground swell of people that feel that way, the rebels, again, in which I include myself in, even though I'm trying to build to the existing institutions, but try to keep them honest about where I feel like this is going to go, mainly being, again, to use a little cryptolese here, on chain, I don't know what tokenized is yet. I don't know, it's
Mm-hmm.
a great marketing term, but it's on chain, on a blockchain. But anyway, part two of the podcast. But so I think that part of it is what happened to the actual plan. It's been co-opted. The end game, I still think we get there, but it's a longer road now because, as you mentioned, the legitimacy comes from your Franklin Templetons, your Wisdom Trees, your Black Rocks, your JP Morgans. These folks are very wealthy and accomplished for a reason. They're smart. They've watched the last 10 years. They've watched no real infrastructure be built. They waited for regulation. They lobbied for regulation. They got their way. So the end game is still going to mean a faster financial system, right? We'll eventually go from T plus one to instant settlement like there already is in crypto. I think we'll have on-chain assets where you'll be able to move all stocks or build a portfolio on-chain or tokenize, as they're saying. And then I think you'll have the ability to, well, which is one of my major calls and beliefs, is that we're going to move from a account-based financial system to a wallet-based financial system. I'm kind of betting my whole career on that. But here's the last thing that I will say. I think one of the things that financial advisors don't even know that they're going to benefit from eventually is this, right? And I'll put it right in the passenger seat for you so it comes home. I've heard you rant about it. We all ran about it. Client has a 401k rollover. Why does that take 6 weeks? Right? Like it just should not take 6 weeks,
It
right?
drives me nuts every time.
It's it's the most ridiculous thing for a multi-trillion dollar industry that we it takes 6 weeks to move money from this account to this account. Why is that going to change? One, it's part of why I'm building Turnkey, but what's going to happen is a client is going to be able to take their public address from Vanguard. They're going to be able to paste that in Fidelity, and those assets are going to move in real time with cost basis, with data, right? That's a real thing. Like that's going to happen.
Hmm.
That doesn't happen without Bitcoin, right?
Right.
So I think the plan is still going to manifest, but not the way that those of us that were there early had thought. It's going to be the really smart people in fintech and traditional finance taking the pieces that work. They're going to discard the crap, right, that they don't even want to know or explain. And they're going to use it to make the existing system better and make themselves wealthier.
Yeah. Okay. I mean, I can, as far as like its vast improvement of the financial system, I completely understand that, and I'm looking forward to that for that reason, that example you shared, and many others. Um, and I wanted to say this too. One of the reasons why that example I shared with you about like revolutionaries, I know that you and others, you're not trying to destroy the or put yourselves above everybody else. I know that you're trying to make improvements, and I especially believe that about you. Um, it's like, so I wanted to make sure you know I appreciate what you're trying to do.
Yes.
I think that it's meant for good.
Yep.
Um, I think that the way in which communication around Bitcoin, there's so much to learn and people have limited time. And so what they see are the things that get attention. And things that get attention are usually either making tons of money, losing tons of money,
Yep.
or people saying mean stuff. so,
Yeah.
uh, but I know that that's not the whole of it by any means.
No.
So
Yeah. To have
I
fun
guess,
staying poor and all that. Yeah. It's not.
right, right. I
Yeah.
guess then, like, with this development of this asset class and like system, does like someone like does the average person what how should it affect their decisions about money?
Here's what I will say. This is the first time in my career as a financial advisor that I feel like it is a lack of my fiduciary duty to not talk about this. Like I have to talk about it. And I never had to before because folks would just come to me that own a ton of it, right? And I was saying this to my partner, right, and our chief investment officer, Eric Smith, and CFP, who's very much involved in the space as well. I was like, we have to at least start having a conversation with clients about what this is and what it means based on the regulatory clarity. This administration is all in on it. They're getting rich from it. Um, and clients not even being aware, forget the exposure part, not even being aware. We have to start having conversations with those who don't own it. Because for me, I've been comfortable in the fact that folks would just come to me and already own it. I never had to have the, hey, Mr. and Mrs. Client, this is Bitcoin, right? And we've started to do that a lot this year. And I feel a strong pull to start to have the conversation with people for it. Here's what I will say. That's one thing I feel strongly about. The other thing that I feel strongly about, which this is um, there's a few folks who are luminaries in the Black and African American community who, Melody Hobson, a few folks, John Hope Bryant, that haven't had the most kind things to say about um, Bitcoin and crypto, and I don't like that. If you are a Black American in this country, you cannot afford to not be exposed to this. And I don't necessarily mean by investment. I mean by understanding it, what it means. And I think it is awful that these people who we look up to and have a big microphone are going around the country telling our folks that they shouldn't, like, almost as it's like looking down your nose and saying, well, we're not smart enough to understand it. Black Americans cannot miss this. The example that I use, if you look at the early people who came to crypto, who were those people? It was the same people who invested in the internet very early. So as a people, we can't afford to go, yeah, maybe, I don't, no. We can't do that. I will fight that tooth and nail. I'll die on that hill. And again, when I exposure, I mean being aware of it. I've chosen to own it and build in it. But there's a lot of opportunity, whether it's jobs or all these other things. I just spoke to a gentleman the other day. He heard someone said, you got to talk to Tyrone. He just got in the industry. He's a chief marketing officer for a company called Reserve One. Black man based in LA, got in 2020. And we had a really awesome, comforting, educational conversation. So again, we didn't get into what do you own and how much. It was just, all right, we need more folks who look like us in this, in this particular space. So that's the second bucket. First two that I feel really strongly about. The last thing that I feel strongly about, as far as money is concerned and people's investments, right? So I'm in La Jolla, San Diego, right? And I met with a firm, father and son shop, met with the son, young. He said he got a lot of clients coming to him, and we were talking about his client profile. And I'm like, look, your clients don't need Bitcoin, right? They got all these $20 million houses that line the beach here. Like, they're already wealthy. Why would I take a risk in something that I don't? It doesn't make any sense. So those that are already wealthy, and if you look at those that proselytize about it, you got to look at where they sit. Your sailors, your folks that have already accumulated wealth are basically saying, well, I've made my money in this thing called the dollar. I'm going to preserve it in this thing called Bitcoin, right? And then way on the other side, you got Jack Mahlers and all these other folks these young folks that are saying, well, I'll be 40 by the time I get my first house, right? I have tons of student loan debt. I need to strike it big. I need to get rich, and I need to, right? So this is the way. And then you got those of us in the middle that are saying, all right, guys, take a breath here, right? Like you may have kids, you may have a job that's, you kind of get by, you got student loans, all these other things. So what it means to folks where individually is where you are on that spectrum. If you are younger, yes, I think like you don't need the YOLO, but I think you should have meaningful exposure. When I say young, I'd say probably 45 and younger. If you are near or approaching retirement and you kind of look at your bond allocation and your stock allocation and things going on there, would a small allocation to Bitcoin help? Sure, but you got to be able to stomach a little bit of that volatility and what it means for the Sharpe ratio, risk-adjusted, returns in the portfolio. But that's not on them. That's on us as advisors. Because now, if you have the data to run the numbers, you say, hey, Mr. and Mrs. Client, look, a 1, 3, 5, 10% allocation, here's what it's going to mean, right? The data have never been there to do that before. So I think at this point, if the United States government, along with all of the names that we have spoken about, are starting to get in this space, how is that not good enough for the everyday American, right? Or our clients? There needs to be some exposure there, but it needs to be thoughtful. And the educate before you allocate is the thing that I always say, but I think depending on where you are on that spectrum, I don't know how you're 25 or 35 right now. Look at the current state of the world and go, all right, that might be something I want to be exposed to meaningfully, not ridiculously, but meaningfully. And if I'm that 50 to 65 range and I'm looking at, again, my portfolio and things that are going on, how long am I going to work, retire, all these other things, maybe a small allocation there to take a little bit of that, right, for the potential upside, but not enough where it completely disrupts my plans and everything else. So long-winded answer, but those are the three buckets I feel really, really strongly about. and have thought about deeply over the last 5 years. And that's kind of how I'm constructing the conversation now.
Cool. That's very helpful. I appreciate the demarcation that you made. It's I mean, I I gatekeeping the like speaking of the people you mentioned who are like talking bad about it, like it's almost like they're like don't even learn about it. Like it's like turn away, don't even look. It doesn't exist. Um I can appreciate why that would be upsetting to you because if you don't even know about it, you can't even begin to make educated decisions
Yep.
about one's particular role in like how Bitcoin should affect one's personal decisions because you don't even know it exists. You're like you're afraid of it because of what you've been exposed to, and then you don't even know what you don't know.
Yep. Yep.
So yeah, I can see the importance of being educated on it. I think I think that like you mentioned that it's been co-opted,
Yep.
and I think that the questions that I tend to get from clients who ask me about it is how do I get involved in a way that is not going to cause me to be the one left with holding the bag? Like that's I think that's their concern because obviously, and even like with our current financial system, those same problems exist. So it's not like we're in some sort of utopia right now, but it's it's such a new way of thinking that I
Yep.
think people are really afraid that they're just buying into a Ponzi scheme and that
Yep.
they're going to be like I thought that this was going to be a thing and now all the rich people they got out at the right time and I'm just left standing here. And I
Yep.
think you're saying that learning about the system on one's own helps to make sure that even though you know that that is going to happen because people will always be opportunists, there will be
For sure.
opportunists, that it's still fundamentally sound.
Yes, fundamentally sound. I think those are all great questions, but as you start to learn, I think those feelings start to dissipate. And it's one of the reasons why we are big believers at 401. And it's a bearer asset. You should hold it. So I have $1,000 that I want to put into Bitcoin, right? I have 10 million, but I have 1,000 that I just want to put into Bitcoin because I was talking to Tyrone about it and I want to try this out. What I would say is I'm going to take $500 of that and I'm going to buy one of the ETFs. I don't care which one, buy an ETF, right? Secure. I'm not a fan of the ETFs, but I do think they serve two purposes. One for folks who just want the easy button, and for folks that have owned a lot and want the security of not either losing it or people finding out they have that much. Let's just give it to BlackRock and let them deal with it, right? So $500 goes in ETF. $500, we're going to go to whatever venue you choose. You can go to Coinbase, you can go to Robinhood, you go wherever. You're going to buy that Bitcoin and we're going to take it off that exchange and we're going to put it in a hardware wallet and we're going to, or your phone, right? Some type of on-chain wallet that you hold. Big believers in that. Now, everyone gets into the seed phrases and the public keys and the private keys and all that other thing. Again, now in 2025, it's so much easier to deal with that. It's still a little bit of trickiness there, but it's never been easier to actually take these things and own them yourself. Now, why do I say that? One, you're going to take the ride, right? You'll take the ride with BlackRock and everyone else. There'll be the dumps, there'll be the volatility in an ETF. The one that you hold, right? The way I explain this to people is the beautiful thing about Bitcoin is, again, you can take it off the chain and you can own it. You can just have that there. It's just peace of mind. You just forget about it. I can't take my Apple stock off the stock market, right? Which is why they're trying so hard to tokenize it, right? We go, man, I bought it at 100, but I feel like it's going to 800. But that piece that I bought at 100, I want. I'll continue the dollar cost average all along the way. But man, this price here is my first 10 Apple shares. I want these, right? Like that's what's beautiful about it, right? And you can store that, you can leave it be. Every single person, and I've been telling people this because I've been blessed now 12 years in, there have been people who've made a lot of money with me suggesting this very early, even with me getting tomatoes thrown at me early from my peers and online or whatever else. But a lot of people have come back to me and made really, really good money and changed their life from, hey, I just had enough to pay off student loans to millions of dollars, right, to buy their first home or whatever. But what I also say is they also forgot, right? They forgot it was there. So if I was like, man, you held through the 30% drawdowns every 6 months, to be like, what drawdowns? I had no idea. They had forgotten about it. Similar to the Fidelity study, the best performing accounts are those that are dead, right?
Right.
Or forgot their login. But
Yeah.
and this is the last thing I'll say about that is one of the things that is beautiful about the real estate market in the house is that there's not this like running ticker on your house with the price 24/7.
Can you imagine?
Oh my God. Oh, it'd be the end of society, my friend. Like, but the fact that at any point I can go in and check the price of this stuff and it's 24/7, 365, that's part of the angst. So I feel like I'm taking every dip and every high, and that's not good for cortisol levels at all, right? And just life generally. So I think those things matter. So now that piece that's off, you're not concerned about that. You want to see the price fluctuation and do that with what's held in an ETF, great. But that's how we frame it. That's what we do. And we found some success with that. And I think that's the way to help people with what you were just talking about.
Yeah, my mother-in-law back in like 2004 bought a bunch of Apple stock in a Roth IRA, and then she forgot about it until like last year. And it's like, whoa.
Exactly.
That.
Yeah.
So is this development, this I think I'll because I could talk to you about this forever,
Yeah.
to be honest, because I have a lot of questions, but I think I'll leave it to one more because I think a lot of people are wondering, is investing in non-crypto assets, is it like running counter to investment in Bitcoin? Like, as I get people that'll say like, well, I'm not going to invest in a 401k unless I can like buy individual stocks or I can buy Bitcoin, the Bitcoin ETF, because everything else is based on the dollar system and that's all going down. And that's another point that makes people fearful. They're like, what? So like, is there like, is the easy investment advice that's made it so easy for financial advisors lately is like, well, just index funds. That's all you need.
Yeah.
And like, and of course it's not just that simple, but it has been considered an established way to expose yourself to risk in a manageable way.
Yeah.
But like when I hear things like this, they're like, well, should we should a person not do that? Or should they do both?
Well, here's what I will say. I have a LinkedIn post about this. So whatever LLM you want to choose, folks, it could be Kimmy, it could be Perplexity, it could be ChatGPT, whatever the case. Go in there and put how much Bitcoin is owned by companies in the S&P 500. You probably own it indirectly already, right? And this is what advisors don't know, people don't know. You own it already because it's on the balance sheet of some of the biggest companies in the country. Robinhood just said that they want to put it on their balance sheet, but just give that a quick search. So folks already own it in their 401k without thinking about it.
That, yeah, I heard that, and I thought that might be what you're where you're headed with that. Okay, well, good. I would like to, because anyone who's listening to, not anyone, but a lot of the people that listen to what I have to say, they're they're just starting to learn,
Yes.
and um, I I appreciate the baseline conversation that you've been willing to have with me.
Sure.
I didn't even talk to you about this yet, but I'd like to do this again and build
Yeah, for
if
sure.
you're up for it,
For sure.
and have you on a future
Absolutely.
episode because
Yeah,
I'd
get
like to
get
be able to.
questions from clients. Yeah, and listeners. Yeah, happy to do it.
Yeah. Okay. Cool. I'm gonna then, like, just for the sake of making it digestible, let's stop here for now, and
Yeah.
we can pick up at a different time. But this has been so awesome. I really appreciate you taking some time to talk about this.
I'm just trying to give what you give me when I follow you on X and all of the beautiful, wonderful knowledge you put out. And like I said, sometimes I'll be scribbling notes and sharing. So one hand wash the other. They both wash the face, my man.
Awesome. All right, man. We'll take care and we'll talk soon.